Hey folks, Bob Egley here from Florida Cam Courses with our special guest Calvin Reams from the Indian River Farm Bureau Insurance Company here in Vero Beach. Today we're bringing you this chat with a cam to discuss the basics of what every condominium unit owner needs to know in order to properly insure their investment and their personal property. Calvin, welcome to our chat with a cam. Thank you very much for joining us.
Bob, thanks for having me. It's always great to come over and visit with Florida Cam.
Well, thank you so much. But pleasantries aside, let's get right to our topic because folks are busy and they don't have a lot of time. And first and foremost, always remember that due to the unique structure and insurance requirements that are imposed by the state of Florida, insuring a condominium unit can be a little complicated. So therefore, it's essential to find an insurance agent who's well versed in writing condo unit owner insurance and condo associations in Florida, because the association does have a synergy with the unit owner's policy as well. Most people would consider Florida a walls-in condominium state. That means that the most people are responsible for the wall inward for as far as their property goes and their units. This can be a little vague at times, and the best answer can be found in the Florida statutes. Check Chapter 718.111 for the insurance statutes for condominiums in our state. They do a great job of stating what the condominium association versus the unit owner is responsible for. But Calvin, can you give our viewers an idea of what items in a condominium unit they're responsible for?
Absolutely. Just as you alluded to, Bob, walls in can be somewhat confusing. Basically, with a condo unit owner, you're responsible for the wall covering, the paint, wallpaper, paneling in. You're also responsible for the floor coverings. That could be carpet, tile, marble, hardwood, ceiling coverings, texture, paint, even ceiling fans, electrical fixtures, appliances, water heaters, water filters, built-in cabinets, countertops, even window treatments, of course, curtains, blinds, etc.
So most of the things that are visible inside a condo unit are the responsibility of the unit owner, the paint, the carpeting, the tiles. And of course the unit owner would be responsible for all their personal property as well. But how about if the unit owner decides they want to add a wall where there wasn't a wall, or take a wall down where there was a wall? Does their insurance cover that in a loss?
Well, yes, it does, but it's very important that you communicate with your insurance agent. That is known as improvements and betterments coverage, should be built into your condo policy. However, if you're substantially changing the value of the interior of the condo, I would definitely contact your agent just to make sure that you have sufficient coverage.
And the associations are responsible for the unit as it was originally built. So if there is a major loss to a building, the association is going to go back in and restore that unit as it was built on the original plans. So that extra room or extra wall you built will probably not be there unless you have coverage for improvements and betterments.
Correct.
So the condo association is responsible for ensuring these common areas and the building elements. What the heck are those?
Well, as we talked with the unit owner, walls in, the association is responsible for the roof coverings, the exterior walls. Now that's paint, stucco, insulation, all the way into the studs, brick, etc. Interior walls, the unfinished drywall, studs, and insulation. Common areas, of course, stairways, sidewalks, are also responsible, are the responsibility of the association. Air conditioning units, plumbing, even exterior windows and shutters. But it's very important that you read your contract to know. I have seen condos where the unit owner is responsible for the windows. So read your contract and try to relay that to your insurance agent.
Florida statutes also require that the association insure the unit owner air conditioning system in the event of a casualty loss. Now, I know in your business, casualty loss is a term.
That is correct.
But the unit owner needs to understand that the association is insuring that in the event of, let's say, a hurricane. If the condensing unit blows off the roof, for instance, the association will do its best to restore air conditioning to the unit and file a claim to make those repairs. However, they're not responsible for the day-to-day maintenance of the unit if it just wears out because it's old. That's not an insurable event for the association. So it is insured in the event of a casualty loss, fire, storm, something like that. But the day-to-day, it's still your air conditioning unit. You still own it. Now, they make certain documents make the association property the responsibility for the maintenance of these items through their documents. So you have to read the governing documents to find out exactly what you're agreeing to insure based on this contract that Calvin's referring to, as far as between the association and the unit owner. You're going to want to be able to bring this to your agent so that they know what to write. I would assume that, a condo policy is a condo policy unless you tell the agent otherwise.
Absolutely, and there are many variations. Condo policies can differ. We're not going to go into it today, but if it's not your primary residence, if it's rented out to others, that can be a different type of policy altogether. Basically, the condo policy that we're talking about, unit owner policy, is an HO6. It will cover the building items that we discussed previously. It also covers your personal property inside, your clothing, your furniture, anything that you personally own. There are special limits on personal property when it comes to theft. Therefore, it's important that you talk to your agent about any excessive amounts of jewelry, guns, silverware, antiques, collectibles. You also have additional living expenses in the event that there is a claim, would pay for you to live elsewhere while repairs are being made. And the most important thing in my mind is what's known as Section 2. That is liability coverage. Bear in mind, if somebody slips and falls, it may even be on association property, but if they can tie their visit to you, you may be subject to lawsuit, and personal liability is what's going to protect you in that situation.
Excellent information, thank you. And I know your agency on Route 60 in Vero Beach has insurance products for all types of things, cars and homes and life insurance. But you'd mentioned that HO6. What if I live in a homeowners association? Is that still an HO6?
Well, if you are, now we're talking about a home, I assume, as opposed to a condo, that's referred to as an HO3, which is a homeowner policy. The HO6 is a condo unit owner policy.
So very important. There's a lot of townhome HOAs that people assume are condominiums, or even the agent might assume it's a condominium because they're attached. Make sure you check those documents, find out what you were organized under, whether it was Chapter 720 or the Condo Statute 718, so you can bring that to your agent. I've had several situations in my career as a community manager where the homeowner had an HO6 policy in an HOA. And it definitely limits what's covered.
Absolutely.
So always check those documents. Kevin, what kind of other things should members know when seeking insurance and selecting an agent?
Well, as far as selecting an agent, Bob, all agents in our area obviously are licensed by the state of Florida, and they're all really, really good at what they do. I like word of mouth recommendations. If you have a friend that, would refer you to a specific agent, just make sure it's somebody that you would like to work with, somebody that's going to service you properly, but more importantly, the insurance company that you select, you want to make sure is financially stable. And by saying that, what I mean is, in the event of a catastrophe, you obviously want to know that the company's going to be around to take care of your loss after the claim.
It's very good. We financially stable. When I was managing properties, agents would come to me for the association policies and tell me that this policy was, AM Best rated, AAA plus plus plus. There's another rating agency that people are using. I don't recall the name, but first of all, is there a difference in AAA, AA, plus plusing, and the rating agency?
Absolutely. You can actually go to ambest.com and look up any insurance company. AM Best is the recognized industry index for insurance companies, and a plus beside a numeral or a letter is a little bit better. There's also A minus. There's B. But AM Best does a great job of describing what the individual rating means and what the outlook for that company would be.
And I know this is a little outside the scope of our condo discussion, but for managers, should they pay attention to admitted carriers versus non-admitted carriers? What's an admitted carrier in the
Very,
United States?
very important, and thank you for bringing this up. An admitted carrier is licensed to do business in the state of Florida. Therefore, comes under the insurance department's guidelines and must adhere to the insurance department of the state of Florida as well as the insurance commissioner. A non-admitted carrier doesn't mean they're bad. They simply are not licensed in the state of Florida. Therefore, the Florida Department of Insurance has no control or legal action over these companies. They may be financially stable. They may be a wonderful company to deal with. They're just not licensed in the state of Florida.
Does FIGA come into play at all?
Not for the non-admitted carriers.
So with an
Only for an admitted carrier.
and with an admitted carrier, what does FIGA do for them? What is FIGA?
Well, Bob, in years past, it is the Florida Guarantee Association. That was somewhat not disclosed, but it does guarantee you as a unit owner that you're going to have backup in the event that your carrier goes insolvent.
Have you ever seen that happen where a carrier went insolvent?
Absolutely.
Does 2004 and 5 come to mind?
And it happened quite a bit in that situation. So to sum it up, I would just really recommend not to put fear in anybody, that you check the financial rating of your company that you choose to deal with.
And should we follow the advice and guidance of our agent in selecting an insurance carrier?
Well, again, if you find an agent that you like to work with that's going to service you well, hopefully you'll be able to accept their advice and they'll steer you in the right direction.
Fantastic. Trust the professionals that you count on to be professional. Now, Calvin, what about flood insurance? I can't count the number of times people tell me I live on the 10th floor, the 15th, the 22nd floor. If the water gets all the way up here, I got bigger problems. Do they need flood insurance all the way up in a high-rise?
Bob,
Condo?
great question, and I would be crazy as an insurance agent to say no. Simply because, and I hear this all the time. Yes, you live on the 10th floor. Water's never going to rise to the 10th floor.
We hope.
However, let's take a hurricane for example. What if the bottom 2 floors of your condo flood and the entire building collapses?
Oh my.
Without flood coverage, you're not going to have coverage because the proximate cause of loss was flooding. So understand that flood is rated based on your elevation. And if you're in a higher floor, yes, you still need it, but you're going to pay a lot less than the people on the bottom floor.
So as a condominium unit owner, you should be able to go to your association and ask them for an elevation certificate to bring to your agent. Some of them are online on the association websites. Other times you may have to reach out to the association insurance agent. But you're going to want that elevation certificate to guide the agent in pricing that. As it relates to flood insurance in a condominium, different things are covered than you would expect. Anything that's attached to the building, the cabinets, the flooring, the wall coverings, whereas they're excluded under Calvin's HO6 policy that we talked about. In a case of a flood, they're insured up to $250,000 or whatever the value is. It's a maximum of $250,000. So again, flood insurance is very important because of the substrate that we build on here in Florida. I mean, if water, and another important issue for folks is that flood insurance is not water leaking from the hot water heater in the unit above you. Flood insurance is specific to water rising from below. So when water comes up from the bottom, it's already eroded part of the substrate and whatever the building was built on. It's very possible the building could suffer structural damage that would affect your unit on the 10th floor.
Absolutely. Bob, let me add one thing to what you just said. We are a direct writer of FEMA flood insurance, and as a unit owner, you cannot purchase building coverage on your flood policy. You can only purchase content coverage because of the fact that the association policy. So without the flood, yes, you may be put back the way up to $250,000 the building was originally built. However, you're going to lose all your contents and everything that you personally own inside of there without having a flood policy.
Jewelry, artwork,
Absolutely.
clothing, it's all.
Absolutely.
Can you explain to our owners, get a segue right into this one, deductibles? You know, I know that I have a auto policy with a deductible, a homeowner's policy with a percentage of the value deductible. What are they deducting from, and what does that mean?
Okay. Now here we're specifically we're switching gears and going from flood back over to the HO6 or the condo unit owner policy. Basically, you're going to see two different types of deductibles. There's one deductible that's normally a fixed amount. It may show on your policy as $500, $1,000, even $2,500. That is referred to as an all other peril deductible. That is anything other than hurricane. So it could be fire, could even be windstorm, Bob. Some people don't understand that. If it's not a named storm, but we just have a storm that comes through that does damage, windstorm, that would come under your all other peril deductible. Could be vandalism, theft, etc. All other peril will always have a fixed deductible unless your company is filed differently. The hurricane deductible, which means a named storm, it could be a tropical storm or a hurricane, is typically going to have a percentage deductible. With us being a coastal county, rarely you'll ever find a deductible that's less than 2%. Now, that does not mean 2% of the loss. That means 2% of your unit's value. If your unit's valued at $200,000, then you've got a $4,000 deductible in that situation.
Interesting. It's a little bit different for the association. The association must disclose the deductible when they renew the insurance on an annual basis, and you'll receive a notice that the board is meeting about that. They have to disclose to you the percentage of the deductible, and this is based on the total building value, of course, and how much money that actually means, that 2%, what that actually means, and also how the board intends to raise that money in the event of this casualty loss. So make sure you attend that meeting, because that's where you're going to find out if we have, a total loss of our building. Here's how much it's going to cost me in the case of the special assessment, or whichever way the board is going to raise those funds. Now, Florida statutes require the condominium owners have loss assessment coverage. There has to be at least $2,000 minimum with a maximum of $250 deductible. But what is loss assessment coverage? If I lose my dog, can I file a claim?
No. Unfortunately, you could be assessed as a unit owner for many things. One being maintenance alone. If your building needs maintenance and you're assessed by the association, your insurance policy is not designed to cover that. However, in the event of a covered loss, say your building had a fire and the unit owner is assessed your share of the deductible by the association, your loss assessment coverage will kick in to take care of that up to the limit of the loss assessment coverage that you carry.
Have you written loss assessment coverage for anyone?
On every condo policy.
What's the maximum that's available through some of your
Well,
coverage?
again, every company is filed differently with the state of Florida. Typically, we'll see loss assessment coverage in the $5,000, $10,000 range, but a lot of the companies have maximum limits of, say, $50,000.
Wow. So, 2,000 is the minimum that you have to have, but try to purchase the most amount of loss assessment coverage for your condo that you can afford. Uh, Insurance is always there when there's really bad things happening, but you have to understand that in 2004, 2005, as a community manager, I was writing letters to owners informing them of $25,000 losses, special assessments for the damages caused by Francis and Jeannie. So $25,000 could rack up really quick. Go to the meeting, find out how much it's going to affect you, and then talk to your agent. So can just popped into my head, can I get this loss assessment coverage but not insure my unit? I just want the loss assessment coverage because Bob and Calvin said it's so important.
Again, you only want what's required. Unfortunately, no. Loss assessment coverage is an endorsement to the homeowner policy. It is not available as a policy or standalone coverage by itself. So, no, you do have to have a homeowner policy to have the endorsement.
So if the Florida statutes say that you must have loss assessment coverage at at least $2,000, and you can't get loss assessment endorsements without having a HO6 policy or another personal lines policy or real estate policy, it sounds to me like insurance for a condo unit is required in the state of Florida.
Bingo. Now, I can't answer that question because I'm not an attorney. But again, if the assessment coverage is required, the only way you can get that is by carrying a unit owner homeowner policy.
So that's important. That you really can't self-insure in our state because of the statutory requirement to have a carrier provide loss assessment coverage. And that's a lot of information for someone to wrap themselves around in this short video. Reach out to an agent. We're out of time today, and we'd certainly appreciate Calvin coming in. Again, it's Calvin Reams from Farm Bureau Insurance. They're on Route 60 in Vero Beach. And of course, wherever you are, you can reach out to Calvin and his team at the Indian River Farm Bureau. Their number is 772-562-4119. Or if you're just looking for some more information on the agency or insurance in general, check out the website at www.ffloridafarmbic.com. www.ffbic.com. Thank you so much for joining us today. We hope we were able to enlighten you a little bit on condominium insurance, and we'll look forward to seeing you next month. Be well. Have a great January. Bye-bye.
Thank you.